In this video, I'm going to teach you my simple order flow plus volume profile trading strategy. This strategy requires no daily bias and it is almost mechanical. And I'm going to teach you how to take setups with volume profile using ICT, but also how you can use order flow to take better entries. Okay, this is a very simple strategy. All you got to do is plot volume profile on the chart using specific timings that I'm going to teach you in this video. And this is like the simplest way to use order flow with volume profile or even ICT. And after watching this video, you'll be able to take trades like this and you'll be able to make easy moolah. All right, so let's start. So what exactly is a volume profile? Volume profile shows you where the volume was transacted, right? And where was the least amount of volume and where was the highest amount of volume. When you draw out your volume profile, so I have drawn out like this. So what you want to do is go here and then choose fixed range volume profile, and then you can draw it out. You can put it here and then put it here, and it's going to plot. So these are my settings. I have the row size set at 300 and value area volume at 70. And then these are my settings if you want to copy them. Okay, so the volume profile has a value area high, which is the purple line over here. And then we have the orange line, which is the point of control. And then again, we have another purple line, which is the value area low. The volume that is in between the value area high and value area low is called balance. What is a fair balance? Balance is basically where the most amount of volume was transacted, and around this area, you're going to see a lot of choppiness in the market because people are considering this level to be fair. So they're not going to push the price up or push down for most of it, right? And the point of control, which is this orange line, is the area where the most amount of volume was transacted. And around this area, price will tend to consolidate a lot, okay? Just as you can see over here. Now, the value area high is where the least amount of volume was transacted, and the value area low, as marked out by these gray histogram, this is the area where the least amount of volume was transacted, okay? So there are two types of setups with the volume profile. We have the failed auction setup, right? So number one, we have the failed auction setup. And number second, we have a breakout setup. Now, there are a lot of ways to take these trades, and I'm going to teach you the exact entry model and how you would approach this, okay? So here is the strategy, guys. First thing first, make sure your time zone is set to New York. Then what you want to do is draw out your volume profile from 18 till 9:30 a.m. New York time. Okay, so I'm going to do this again. So fixed range volume profile from 18 till 9:30. And make sure that in the inputs, the extend right is unchecked. Okay, now you have a volume profile. What is a failed auction setup? So let's just go here and let me just do, okay, let's say we have a volume profile like this. Okay, and we have the value area high, the least amount of volume, and the value area low, the least amount of volume in this entire range. A failed auction setup is when we push above the value area high, in this case, and then we get instant rejection, okay? And let's say that this is the point of control. We get instant close below the value area high. So we first close above or wick above the value area high, and then instantly we get a close below. That is a failed auction setup. The participants tried to do a breakout out of this balance, but they failed immediately because sellers stepped in here. Okay. And then there's a condition. Okay, so when this happens, right, you're going to see price go back towards the point of control first. That is your safe level. And then it can go to the value area low. And if price rejects from there as well, we can then keep going to the point of control and then the value area high. Okay, and then we confirm this with order flow or ICT, and I'm going to teach that later on in the video, so make sure you don't skip any part of this video because it's like a full course for you. So this is failed auction, okay? Instant close above or rejection and then close back below. So what is a breakout, right? So let's say that price is here and it goes up and then it breaks out, like, but then in simple words, it can just reverse, right? So what I want the price to do here is consolidate a bit or stay above the value area high for some time. When that happens, we are building a new balance here. And that means that the buyers are in control and they are willing to push the price higher. So when we get consolidation above the value area high, and then we get a breakout out of that consolidation like this. So when we get a breakout out of that consolidation, with order flow confirmation or ICT confirmation, you can take your entry at the retest, and then you're going to get a strong breakout to the upside. All right, so let's go back to the strategy. So right here, let's talk about how, so this happened today, and I'm going to teach you how you would have taken this trade using ICT first, and then I'm going to teach you how you could have taken it with order flow like I did during a live stream in the Discord. Okay, so we have the volume profile from 18 till 9:30. Now look what just happened here. I'm on the 5-minute time frame if I'm looking to trade with ICT, right? Or I could go to like 2 minutes or 3 minutes. I'm not going to use 1 minute with ICT because it's just quite risky. So this is the value area high. Price first closes above the value area high. And then with ICT, what you can do is wait for inversion, CISD, breaker, something like that. Okay. So let's assume we have inversion over here. We can also use the 4-minute time frame, which would be better, right? So we have this inversion, guys. Oh, the volume profile is not. Where did the volume profile go? All right, let's do this. Maybe. Okay, it's back up. So we go up and then we have a failed auction setup. Instant rejection back below the value area high. So first step, I need the price to close below the value area high. And then for ICT confirmation, I need inversion on the 5-minute or 4-minute or 3 or 2 minute, or I need CISD. Now, once you get that, so let's say you took your inversion setup right here, right? Your stops above the bodies of these candles, and then you can target the value area low for 1-to-2 risk to reward ratio, right? If you took your entry from CISD, you can put your stop right above this inversion just to be on the safe spot, and then you can also target 1-to-2, or you can target these lows down there, which is quite risky. You always want to target the value area low, okay? So that is how you would take this failed auction setup using ICT, right? All we're doing is looking for failed auction setup. We go up, close above, or a wick above, and then we get inversion on the 4, 3, 2, or 5-minute time frame. We are not going to look at the 1-minute time frame. And then, most importantly, guys, we need to see a close back below the value area high. That is the most important thing, okay? So this is how you would use ICT. Now let's go to the order flow tool over here, and I have the exact same timing here from 18 till 9:30. Although it shows 8:30 on deep charts, which is the order flow tool, right? It is 1 hour behind, right? Because my time is not set correctly, but it is 9:30 here. So from 18 till 9:30. So notice what happened here. So what I do is I use this indicator called deep trades or big trades. You might have seen the indicator with big bubbles, right? Big aggressive bubbles, red and green. Well, I can put the circles, which are bubbles, but I have it on text and squares, small like this, okay? And I have my threshold usually set at 60. So notice what happened. So this is the value area high. We go above the value area high. So we had a lot of buyers stepping in, right? So these green boxes over here are aggressive buyers. So 63, 77, 62, 108, and these purple small boxes are aggressive sellers, right? So you can see that the buyers were getting a follow through. So they were aggressive buyers, price goes up. Aggressive buyer, price goes up. Aggressive seller, price didn't go below. Aggressive buyer, price goes up. However, at this level, I'm looking at on the 1 minute time frame, you can see we have this candle. Now this candle tells you everything. So within this one candle, we have 103 aggressive buyers that didn't get a follow through, but we have 104 sell contracts that got a follow through. Okay, so around here, the sellers won the war. And also know that we are above the value area high, right? So when I see absorption, so this is absorption when aggressive buyers step in, but they get no follow through. And what is a follow through? A follow through is when we see aggressive sellers and we get the result, right? Aggressive buyers, no result. Aggressive sellers, result. That is step one, confirmation. Step two is looking to the left side and marking out aggressive participants in close proximity. So over here we have 62 and 77 buyers. So when we get a close below that level, that is going to give me high conviction that the buyers have lost the control and we could start pushing down from here. So that is the trade that I took, right? And I had my stop right up there just to be on the safe side because I just wanted to go for 1 to 1.5 because I want to hit my daily profit target and also consistency rule. But ideally, you would put your stop right above these aggressive participants because we just inverse them, right? And then you could potentially target the value area low, which on the deep charts is down there. So the volume profile can be a bit different on the deep charts and the trading view because the volume profile here is the actual volume profile, but there's not much difference. Those levels are still very strong on TradingView, okay? It's just that TradingView shows you the volume profile from a specific broker, right? And also it is based on tick data. This, however, is the actual volume calculated with the orders, okay? So it's not really a big difference, but yeah, that's it. So this is the trade that I actually took. I actually went for 1 to 1.5, but you could have held till 1 to 8 actually with Orderflow. So here's the difference, right? If you're using ICT and you took this inversion over here, you could go for, let's say, 3RR. But if you took this trade with Orderflow, you could have caught a 1 to 9 risk reward trade. Isn't that crazy? Our stop loss are logical. Why? Is logical. Why? Because we have our stop above the aggressive participants that failed. So if price goes up again, then that means that, oh my God. So that means that we're going to reload. They are going to reload, not me. Damn, I can't speak and something's wrong with my throat. Anyways, let's move on to some examples. And I'm going to also show you a breakout example and then we'll end the video. All right, so here is example number 2. I have my volume profile drawn out from 18 till 9:30 and this is a breakout trade. Okay, so let's drop down to 1 minute time frame just to see what's going on. Right? So at 9:30, this is 9:30, right? And at 9:31, as soon as the market opens, we go up. But notice what happened before the market opened. So we had a failed auction set up here on the 1 minute, but it failed, right? So we are looking bearish here, right? The buyers are still not in control even after the failed auction setup. And also notice this consolidation in a downward trend. Right? We are staying below the value area low. We are building volume. Look at this volume. It is not a low volume. The volume is rising around here. That means that they're creating a new balance, right? This is the value area high of this balance, and this is the value area low of this newly formed balance, right? So the way that you could take breakouts is first, you can look for your trades at the retest of the value area low, or you can mark out the lowest point before the 9:30 and then you can look for a breakout like this. So how would you take this entry? So we can start looking for entries on the 2 minute, right? Or 3 minute or something. So to take trades using ICT with this, At the retest of the value area low, you would wait for inversion on the 2-minute or 3-minute or 4 or 5 minutes, right? So let's see if we have a fair value gap on the 3-minute. No, we don't have a fair value gap on the 3-minute, so we stick to 2-minute. Never take your entries on the 1-minute time frame. Okay, so with this information that we stayed below the value area low for quite some time, and there was not an instant failed auction setup, right? If after the market opened, we pushed below and then we had instant recovery, that would be a failed auction setup. So notice what happened here. We go up, retest this level. On the 5-minute time frame, you can see we didn't close above it. So that is not a failed auction setup. It's just on the lower time frame, right? And that's where the power of order flow comes in. I'm going to show you how. So notice we retested this, yes, and then there were two ways to enter this trade, using just ICT or a breakout. So inversion, this could have been your short position right here, stops above the bodies, and you could have targeted for 1 to 2. Or on the 1-minute time frame, right, you would go on the order flow tool right here, and you would go here, deep trades, set your threshold to 60, right? And notice what happened here. At the market open, knowing that we are building new balance down there, we are accepting prices lower, we are consolidating, we are having a choppy price section below the value area low, meaning that we are accepting prices lower. With that information, we can know that we could get a breakout to the downside. However, if I wanted to take a long here, I would look at the close proximity, and we have 60 sell contracts here. So if I wanted to take a long here, I would wait for price to close above it. But notice how we respected this level and then we reject it off. So notice we have 61 buys, 90 buys, 76 sellers that initially got absorbed, but this type of absorption is reload absorption, where when the sellers take control, it's going to give it more momentum. I wish I could explain everything in this video, but I'm trying my best here. So retest, what happens here? What happens here, guys? We have 82 sellers, still absorption, but reload absorption. Why? Because if you look to the left, we have these aggressive participants, 61, 76, 90. When we get a close below it, that is your short position. However, a safer approach would be to look for a breakout below the lowest point before the market open. So this is the market open. Look to the lowest point below the value area low. This is the lowest point. If we get a strong break below this, so what is a strong break? When we have aggressive sellers within the body of the candle and not the wick over here. If we had sellers in the wick like this, this is absorption. We have sellers at the wick, this is absorption, right? You can see around here we had absorption and then we pushed up. But at the retest, you can see we just melted down. Now, this is the safest entry. Why? Because when we broke below it, we had 61 and 155 aggressive sellers within the body of this candle. That, ladies and gentlemen, is your short position right here. And you would put your stop. Look at this, 80 contracts, 93 contracts. This is like your safest spot. If price goes above these sellers, your trade idea is invalid, right? And you can then hold the trade like this. Isn't that simple? And look at this. Just look at that. Okay? Look at that. It just drops. Isn't that phenomenal? I'm going to give you guys one more example and then I'll end the video. All right, so here is another example looking at NQ. So I have the volume profile drawn out on TradingView as well. And you can see on the 5-minute time frame, we have the failed auction setup, right? So after the market opened, which is right here, we were above the value area low and we were just hovering around the point of control. And then right here, what do you see? We have a sharp ass rejection and then we push up. Right? So let's just go to the 1-minute time frame. Sorry, not the one. Remember that 2-minute time frame to see what's going on. Right? So notice when we went below the value area low, what do we have? We have CIST, guys. Right? Let's go to the 3-minute time frame to get more information what's going on. And yeah, that's pretty much like CIST entry on all time frames if you look at it. Right? So 2-minute, bam, right there. Coming from the value area low, failed auction setup, instant close or wick, and then reclaim instantly No consolidation you can see over here as well and over here as well. So what does that tell you? We are in a failed auction state. And that's exactly what happened. Now, how you would have caught it on deep charts, right? Using order flow. So on the 1 minute time frame, you can see after the market open on deep charts, we actually did tap below the value area low before this, okay? So notice what happens here. Aggressive sellers, but then look at this, 219 sell contracts. Isn't that insane? So if you wanted to take an entry here, and then you can also see we have a close above the value area high. You could have taken a long over here and targeted the point of control. However, I wouldn't take this trade because we don't have aggressive buyers stepping in or absorption of sellers in a bearish candle. Sorry, in a bullish candle like this over here. We have 60 sellers getting absorbed in a bullish candle. So 60 sellers, but no result. And we close bullish. What does that tell you? Buyers are in control and sellers, no matter what they do, how aggressive they go, they're not getting the results. So the way that I would enter this trade is I would wait for price to close above these aggressive sellers, 76, 78. But there's a problem. The point of control is where price tends to consolidate and then do random shit, or it just reverses. Okay, so point of control is like your break-even zone, or most importantly, you should take your profits most of the time at the point of control. So if I saw this, that we got to close here, if I take an entry here, I have very less room. So I would go break even here, right? So yeah, that's it. But then notice what happened, the actual trade. We went back below the value area low. Once again, we have the volume profile drawn out. We sweep out this low. Look at this. 97, 133, 64 sellers. What happens here? We get a close above all of them. We have 110 buyers in this bearish candle, but this is what I said, reload absorption. If we reclaim these aggressive buyers, we're going to reload and we're going to push higher with insane volume. Now look to the left. What do we have? We have 103 previously absorbed buyers, and within this bullish candle, we have 60 absorbed sellers. So when we reclaim this old absorbed buying level, 103, we're coming from the value area low. We have closed above the value area low. And we have sellers being absorbed here. Right? I know this might not be easy, guys. But if you keep watching this video and learn to read order flow, you're going to make insane amounts of money. Okay? And then look at that. That is the actual move with order flow. Was there a much difference using ICT with this trade? No. Right? Because this is still a decent trade. If I play this through, you can see we still pushed up. This could have been your long at the retest. Here, stops below the bodies or below the value area low. 1 to 3, manageable, doable. Over here, look at that. What do? We just push up, right? 1 to 10. Isn't that crazy? Subscribe and hit the like button. Otherwise, I'm not going to be happy because I'm giving away all the sauce for absolutely free. I'm not charging you $5,000 for this. Come on, bro. See you guys in the next one. Take care. Goodbye. Mwah.